Hi, I'm Jack Travis. Along with the email we sent out on some of the recent transactions in the portfolio, we thought we'd give you a bit more information on what we bought and why.
The first step in our selection process is to determine where money is flowing in the markets. We then look at some of the fundamentals like return on equity, sales, and earnings growth. And then we also have to look at past behavior to find the companies whose steady growth has been translated well into the behaviors of the stock.
I'm going to talk about Ritchie Brothers Auctioneers. The company was started in 1958 in Kelowna when two brothers needed to raise money to cover a bank loan for another business they had. Today it specializes in auctioning heavy used equipment, especially in the agriculture, construction, and transportation sectors. Became a public company in 1998. Sort of an interesting point, it's led by a number of women. Its board chair is Beverly Briscoe, CEO is Ann Fandozzi, and CFO is Sharon Driscoll. It has three main lines of business: live on-site auctions, online auctions, and a brokerage service for negotiated sales of large lots of equipment. A growing fourth arm focuses on services from lending through appraisals, inspections, and also in parts and logistical assistance. In 2015, they bought a 75% share of Excura, a firm they've been using for their online auction simulcast technology. Excura also serves other auction companies such as Christie's. The global heavy equipment auction market is highly fragmented, and Ritchie Brothers has grown organically and through the acquisitions of complementary companies. They have 12 locations globally, from North America through to Europe and Middle East and Australia for their auctions. They also maintain a presence in 48 other countries, enabling clients to sell from their own locations. Ritchie Brothers has become the dominant player in this market, and sellers benefit from its scale and reach to provide strong bidding demand and final prices. Buyers benefit from expanded choices and Ritchie Brothers appraisal services. In 2017, they bought Iron Planet, an online marketplace which helped Ritchie Brothers expand its online auctions throughout the pandemic. The increasing level of online sales provides customers increased options on where they would like to buy or sell equipment. During periods of economic stress, companies that need to raise cash and those looking for a less expensive option than new equipment often turn to Ritchie Brothers. For example, during the credit crisis of 2008-2009, their revenue and earnings increased dramatically. Part of our thesis for buying Ritchie Brothers is that if rising interest rates cause companies to stress and they need to sell equipment to raise cash, Ritchie Brothers could benefit. They have grown their dividends from 2007 to 2021 every year, starting at 30 cents and ending at 94 cents last year. In the same period, revenue has also grown steadily, from $315 million in 2007 US to $1.4 billion US last year. Their profitability share has also increased along with that. We think this company is well positioned to help your portfolio no matter what interest rates do. Travis, over to you.
Thank you, Jack. So the other company we've added to our portfolios is called CCL Industries. So CCL was added to our client portfolios that are in our Tier 3 models, and those are individuals or families that have $450,000 of household assets with us or more. So CCL is a Canadian company, and it was founded in 1951 in Ontario. It became a publicly traded company in 1999, and even to today, the founding family is still actively involved in its management. The company has expanded globally into 43 countries, and as of today has about 25,000 employees. When CCL first started, it was providing packaging material to consumer goods companies. Since then, however, the company has been able to grow both organically and through strategic acquisitions. For us, this was one of the main attractions, as it had been able to find niches within the market that it could grow and become an industry leader in. We wanted to also provide you just with a couple of the companies that it has acquired over the last decade. So in 2013, CCL purchased a company called Avery Labels. I'm sure most of you have heard of this company. However, if you haven't, next time you're in Staples, you'll see the Avery Labels brand on a multitude of their inventory. In 2016, CCL purchased a company called Checkpoint Systems. This company developed the RFID tag. For those of you that don't know what an RFID tag is, I'll just provide you an example. So if you were to go into a clothing store and you found the article of clothing you're looking to purchase, you bring it to the cashier, and the cashier has to remove a tag from that piece of clothing. In the event that they don't and you walk out of the store, an alarm system will go off. And so the RFID tag technology allows the store to prevent its articles of clothing from getting stolen, but it also allows the store to track its inventory in real time. And then finally in 2017, CCL purchased a company called Innovia. And Innovia helps with specialty engineering coatings used for both packaging but also banknotes. So as of today, CCL helps produce over 80 different currencies with its banknote substrates. As you can see in the email that we had sent you, CCL has a number of customers that it works with. The appeal for us, though, was that many of these customers are what we would consider blue chip, so large, stable companies. And for us, this just gave us certainty and a higher degree of confidence that their revenues would continue to be able to be maintained and also grow. Lastly, we just wanted to leave you just with some of the financial numbers. So in 2007, CCL had $1.14 billion of revenue, and today they've grown that to $5.7 billion. So that's great. CCL has also been able to use their debt effectively, and so they've used this to help buy new companies, and then after purchasing the company, they've been able to also pay that debt down in an effective way. And so for us, this was again an attractive feature because it shows that CCL has the ability to continue to grow and expand into different niches within the market. I hope this was helpful. Thank you.